fourth quarter with its best growth in deposits and advances in over a year. The deposit mix also improves quarter on quarter. The stock perks up. Crude sees a sharp 6% drop overnight on fears of trade war will trim global growth. A move by OPEC Plus to speed up output expansion also dents prices. Crude sensitives swing to the news. The White House clarifies that the tariff on India is 26% as presented by President Donald Trump and not 27% as was indicated in the annexure released by the White House. Hello, good afternoon. You've tuned into Business Lunch coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. Not a pretty picture coming in on the market front that we're seeing. D Street in the red. Look at the Nifty day's lowest point, almost over there, 22,967. 1.24% decline that we're seeing for the Nifty 50. Advanced decline ratio today clearly is in the favor of declines versus advances. So that pressure is there, and that is what you're seeing in the mid and small cap as well. That underperformance that is coming in for the broader markets clearly visible over there. The Nifty Midcap is down a more than 2.5%. Nifty Small Cap is also seeing a sharper fall coming in. Day's lowest point, almost 3% decline that we're seeing. Only sector that's in the green today is the banking financial side. We did have those Q4 updates coming in. IDFC Bank, like we were talking about as well. So keep an eye out on the banking space. Pharma and metals among the top drags in today's session, given the new commentary that is coming from Donald Trump. And continuing with the topic of Donald Trump and the tariffs, now global equity markets, when you look at that went into a risk-off mode following US President Donald Trump's Liberation Day tariff announcement. Stocks on Wall Street saw a sharp cut with over $1 trillion of investors' wealth that was wiped out. Let's hear out the US President on what he had to say in terms of recession to the sharp fall in the US market.
Well, I mean, it's to be expected. This is a patient that was very sick. We really inherited a terrible economy, as you know, with a lot of problems, including loss of manufacturing, plants closed up all over the country. You know, we've lost 90,000 plants since NAFTA, if you think of that. 90,000. It's not even believable. And about 6 billion jobs. And so it was a sick patient. It went through an operation on Liberation Day, and it's going to be a booming country, a very booming country. It's going to be amazing, actually. And we see it because we have trillions of dollars committed to come in, trillions.
And the president was also asked if he was open to negotiating with countries if they called on him. Here's what he had to say on that front.
Well, it depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff? The tariffs give us great power to negotiate. Always have. I've used them very well in the first administration, as you saw, but now we're taking it to a whole new level because it's a worldwide situation.
Now, Trump's reciprocal tariffs have shaken the global markets. Prashant is joining in with us now to decipher what Trump government is aiming with this shakeup.
It's the day after what US President Trump called Liberation Day. It was a different kind of a day for Wall Street. Indices sold off big time. Nasdaq was down 6, S&P was down 5, Wix was up 30%. It was the worst COVID market since the depth of COVID crisis in 2020. What is the Trump team's positioning thinking now? Well, the message from his team seems to be clear. They're not backing down at all. The latest in that sense, right, how this sort of goes forward, there's no indication yet that Trump or his team are willing to dilute or delay the proposed tariffs. Yes, the administration is open to negotiations, but they are not chasing a small or a quick win. The bar to even getting to the negotiating table seems to be much higher. The US isn't just looking at tariff parity, it's aiming for a global restructuring of trade with special focus on structural and non-tariff barriers. And of course, even there is a deal down the line for countries, the new tariff floor will likely remain at 10%, as we well know now. In terms of what basis this negotiation will take place, a key document is already in play. The 2025 National Trade Estimate report from the USTR is what I'm talking about. It's online. You can check it out. It's 400 pages long and breaks down the foreign trade barriers country by country and was prepared by the Trump team. This could shape how and when countries get invited to the negotiating table. So what are the next steps here? Well, for starters, the USTR is expected to send a detailed report to the US Congress clarifying what exactly was announced in that executive order. We're also watching for guidance from the Council of Economic Advisors on how they've calculated these proxy tariff rates. It's not reciprocal tariff. They're real, but they're not reciprocal. Controversial claim that India charges 52% on US imports and many other countries for that matter. There is also a practical question ahead which needs to be watched closely. Can the US Customs and Border Protection actually process these new tariffs without causing port delays or disrupting supply chains? Important to monitor for any business disruption. We've, of course, been asking companies that. So far, global reaction has been actually measured. Several countries have expressed disappointment, regret, outrage, but many have stopped short of announcing retaliatory tariffs. For now, most governments seem to be keeping the door open for negotiations. But that could, of course, change quickly. We'll find out it's a fluid situation. So one day after Trump's bold tariff play, the tone is set. This is about long-term leverage, not short-term wins. This is not to say that there won't be negotiations, but it looks like the Trump team is digging in their heels after the sweeping and harsher than expected tariff announcements a day earlier, and wants the message out, come and negotiate, but the bar is going to be quite high. Back to you.
Thank you so much for that, Prashant. But on that note, let's also listen into what Mohammad Al-Erwan, Chief Economic Advisor at Alliance, had to say and his views coming in on Trump tariff orders and the impact on the global economy.
They are significant, and you've seen this come from markets. You've had a major repricing of growth prospects with a recession in the US going up to 50% probability. You've seen an increase in inflation expectations up to 3.5%. And you're having business leaders right now, they're not waiting and debating should other countries retaliate, de-escalate, or just wait. You're hearing business leader after the other, that's what I'm hearing, saying we're going to get hit on cost, we're probably going to get hit on revenue, we need to do something about it. So there has been a significant change in the outlook for the US economy and the global economy. I don't think it's inevitable because the structure of the economy is still strong, but the risk has become uncomfortably high. I think that the market is underestimating the inflation side of what's happening. The first reaction has been concerns about growth, and that's totally understandable. We haven't had two other reactions yet. What will happen to growth in other countries? And that makes a question mark on whether the dollar weakness will continue. And then the second, what does the Fed do? I think that if we're lucky, we'll get one rate cut, not 4, 1, and it wouldn't surprise me if we get none.
Okay, now let's move on and also listen into what is coming in on the new reciprocal tariffs that were announced by US President Donald Trump in terms of risks tipping the American economy into a recession and pulling the global economy down with it. So this is the word coming in from Mark Zandi, the chief economist at Moody's. Listen into what more he had to say.
Well, if the reciprocal tariffs are implemented in full, I would expect some retaliation from countries abroad. I don't think they're going to sit on their hands. So the combination of those two things will result in a recession, an economic recession. It's a tax on American consumers. The bulk of the tariff increases will fall on them. Businesses that import product will have to pay more, which will hurt their profitability and thus their investment in hiring.
Let's now listen to Kate Moore, CIO at Citi Wealth, talking about Trump's tariff announcements and impact on the markets and what investors should do in the light of uncertainty and more.
That effectively we don't want to be adding to risk right now. If you have a portfolio that is fully invested, we're going to sit tight and think about being a medium and long-term investor. But if you have cash that you were looking to deploy, the uncertainty factor, whether it's in bonds or in equities, was too great for us to have a really convicted call. Price levels are really interesting, and we'll be watching some of the technicals. We want to be thoughtful about when we re-enter the market or we think about adding to risk. But I would also note the uncertainty factor is just starting. I mean, one of the things I kept telling the team going into yesterday is April 2nd is not going to be a clearing event for the market. Earnings are just going to be starting. I'm watching really closely how companies talk about what they expect for the balance of 2025, even ex the tariffs, because we know that there was some slowdown in momentum.
Okay, on that note, we're going to step into a very short break. When we return, we get you more news and updates revolving around Trump tariffs orders and its impact. Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Now, the US president has also had another surprise in store when he said that his administration was working on imposing tariffs on the pharma sector as well. Listen in.
The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals as a separate category. And we'll be announcing that sometime in the near future, not too distant future.
And after this commentary that we heard, we saw that the pharma stocks have actually started seeing a fall coming in. Yesterday, we saw that run up. The top sectoral gainer today, the top sectoral loser is Nifty Pharma. Now, why is that so? India currently is imposing around 10% tariffs on imports from US in the pharma sector. US is not applying any tariff on Indian imports as of now. So 0% tariff there. So they want to apply tariff on this. Now, who is the most at risk? If you look at it, generic formulation players as well as the CMO players, they are the most at risk. They have high exposure to the US as well. So depending on the exposure, obviously we'll see an impact coming in. It could be in the range of around 9 to 12% on the EBITDA front that we would see that hit coming in, and one-time hit is what analysts are highlighting. Now, other than that, we had further details that came in from a Citi note as well, where they were talking about exposure and what would be the hit in terms of EBITDA. So when you talk about Gland Pharma, they have a 50% exposure. So the hit in terms of the EBITDA would be in the range of around 8 to 10%. Other than that, Aurobindo Pharma, 12 to 13% hit on this EBITDA margin that we would see. It is around a 48% exposure there. Dr. Reddy's 47% and to 12% range of EBITDA hit, while Zydus is 46% and an 8 to 10% hit. Now, other than that, Lupin, Cipla, Sun Pharma and Torrent, they are seeing a bit of a lesser impact of less than 6%, 7% range, and below that mark is what the impact we'll see. A lot of these companies also have facilities in the US. So Cipla, Dr. Reddy's, Lupin, Syngene, Piramal Pharma and Sai Life Sciences, they have facilities there. So that impact on these companies would be a bit lower. But as of now, we are keenly watching out for what Trump is going to be announcing in terms of what would be the tariff as well. So that is something to watch out for today. All the stocks are down and out in trade. But let's also listen in to analyst Nimesh Mehta of Research Delta Advisors and Aditya Khemka of Incred Asset Management on what he had to say about the Trump's pharma tariff announcement.
What I understand is that the reaction that we see today on the stock market to me looks a little overdone because, yes, there is a lot of competition in the generic segment, and I fully agree. But, the primary reason of this competition or the pricing pressure we see in generic is also because of Indian pharma manufacturers. So there are so many manufacturers, which is itself is, kind of drawing the prices down in a normal market scenario. But if you look at Indian pharma as a consolidated unit, so their bargaining power is going to be very high. So in toto, if there is one company who is getting impacted because of the tariff, the most likely scenario is that all of their competitors or most of their competitors will also be in the same boat.
I think the most impacted players will be generic players. The reason being twofold. Number one, the volumes of generics that goes from India is significantly higher than the volume of innovator products or specialty products or API for that matter that go from India to the United States shores. So the highest impact will probably be on the generic players. Number two, because these generic players don't have any bargaining power on the table. It's a commoditized product that they sell. Every player has the same product. So when it comes to the bargaining table with the buyer or with the government as such, they don't have any bargaining power on their side to sort of discuss any meaningful outcomes for themselves. So the pecking order would be mostly impacted would be generics, followed by API, CDMO, and lastly the specialty guys, because the specialty guys have the most bargaining power. They have patented products.
Okay, apparel is one of the other segments that is likely to get impacted by the reciprocal tariffs. We spoke to apparel export body representative, and he said order cancellation and discount demands began last week and have escalated after the tariff announcements. While Gokuldas Exports Management says that consumers may not be able to bear the increase in tariffs.
What is happening here is the US importers, they've already started asking for discounts and cancellations. Now, this is a big issue for us, and this needs to be addressed by the government. They have to take it up with the government there, or, like China did, when 10% tariff was imposed on China, many retailers, they started pushing manufacturers to reduce prices.
This is huge, I mean, 20% and so on and so forth are very large. It's very difficult to, manage it through cost management and all of that. So, cost of raw materials, etc., will not offset all of this. So this tariff delta is advantage India. But then I think what we really need to keep in mind is that what is the impact of all of this on end user demand? Because all of this looks great on paper. We have to see how does this impact consumer demand in the United States, which is a very large market. And if this tariff actually will get passed on to the customers, will they buy in the volumes that they will, they have been used to buying, right? So that is something we need to see.
Now, sources tell CNBC-TV18 that trade ministers of India and the EU will hold talks within days for over a free trade agreement between the two parties. Parikshit Luthra is joining in with us to give us more details on this one. Parikshit.
US reciprocal tariffs will have a knock-off effect on India-EU FTA talks. Sources say Commerce Minister Piyush Goyal and his counterpart, EU Trade Commissioner Maros Sefcovic, are going to talk again very soon. The tariffs imposed by United States on both EU and India will accelerate efforts to conclude an FTA by the end of 2025. Sources also add that India is very keen to have an FTA by the end of this year. We learned that EU companies are very keen on investing in India, but technical barriers are holding them back. The European Union is also following India-US trade talks very closely, especially on agriculture and dairy. Reduction of tariffs on cars and components would be one of the central pillars of the trade talks, just the way it is an important part of negotiations between India and the United States. EU is looking for a fully WTO-compliant FTA with India, not a quick fix, and something that will serve the interests of both countries in the long term. Speaking to CNBC-TV18, the European Union ambassador to India has said that reciprocal tariffs strengthen the rationale for an India-EU FTA, and the US tariffs will not define these negotiations. He further said there is determination and high-level political engagement to get an FTA done. EU actually wants to see the fruits of the harvest by end of the year and more progress on the FTA by the next India-EU summit next year. The ambassador, Hervé Delphin, said that while there is good progress, both nations will continue discussing elements of a meaningful trade package. The European Union is looking to significantly scale up cooperation in clean tech, semiconductors, defense and security with India.
Thank you so much for that, Parikshit. On that note, we're going to slip into a very short break. We'll get you more news and updates on the other side. Welcome back to Business Lunch on CNBC-TV18. Now, the Supreme Court slams Delhi High Court order directing takedown of Wikipedia page critical of Delhi High Court decision. Ashwat Kumar is joining you. Let's ask to give us the recent and latest update on this front. Ashwat, what is this details that you're picking up here?
Well, just to begin with some context as far as this dispute is concerned, ANI had challenged a web page that appeared on Wikipedia in the Delhi High Court. ANI had alleged that this is a case of defamation. The reason for that was because that page had described ANI, the news agency, as a propaganda tool of the government. Now, that is something they had objected to. They fought in the Delhi High Court. The Delhi High Court, however, importantly, in the course of these proceedings, had directed for takedown of a page which had basically captured the essence of this dispute between ANI and Wikipedia. That direction for a takedown of that web page is something that has now been challenged by Wikipedia before the Supreme Court. And this is where today's proceedings come into context. The Supreme Court was not happy with the Delhi High Court. Supreme Court was not happy with how the Delhi High Court had directed for a takedown of the page without even a conclusive finding of whether there's been any defamation, of whether there's been any contempt of court. In fact, the Supreme Court observed that, questioned how such orders can be passed, noting that courts need to have a far thicker skin. They cannot be, quote unquote, so touchy about criticism. In fact, the Supreme Court observed that on a daily basis, the media is far more critical of the conduct of the judiciary, far more critical of the conduct of the Supreme Court, and that there is a thick skin required that judges need to have, that courts need to have, that such orders for takedown, especially against the media, cannot be passed. That's the initial, of course, the prima facie finding of the Supreme Court. At this stage, the hearing in this case will continue on April 9th. Back to you.
Okay, Ashwin, thank you so much for that. More updates will come in on April 9th. On that note, let's also listen into Commerce Minister Piyush Goyal, and he said and has said that the Indian startups should introspect on the sector they choose to focus on. Speaking at the Startup Mahakumbh 2025, Goyal also said that the startups are focused on food delivery and hyperfast logistics, while Chinese startups are involved in semiconductor and robotics. He added that having just 1,000 startups in the deep tech sector is a disturbing situation.
We are focused on food delivery apps, turning unemployed youth into cheap labor so the rich can get their meals without moving out of their house. And against that, what does a Chinese startup do? Work on developing electric mobility, battery technologies, and with that, they're today dominating the electric mobility ecosystem. We are very proud of what India has done. But are we the best in the world as yet? Resources are going only towards hyper-fast logistics. And look at what the other side is doing. Robotics, automation, machine learning, preparing themselves for 3D manufacturing.
And on that note, we'll wrap up this edition of Business Lunch. And as we wrap up the show, there's some somber news coming in for y'all. Yesteryear actor Manoj Kumar passed away at Mumbai's Kokila Bean Hospital earlier today. He was 87 years of age and he was known for his roles in patriotic films and earned the title of Bharat Kumar. Some of his hit films include Purab and Paschim, Kranti and Roti Kapra Aur Bakan. The veteran actor received Padma Shri in 1992 and Dada Saheb Phalke Award in 2015.